The curious case of Sweden's cashless society. The population of Sweden, the Scandinavian nation known for Volvo and Ikea, is 10 million people, smaller than the populations of New York City and Los Angeles. As it advances to a so-called cashless society, marginalized Swedes in rural areas, seniors, the disabled, those with lower incomes, or people choosing to shun technology, are upset that they no longer have access to the cash as freely as they used to. This is what the future of money may look like. The move away from cash hasn't been smooth. From detractors to government intervention, Sweden's had a bumpy road toward a digital-only society. Paper money and coins, Sweden's krona, are still in circulation, but they've become very scarce. Only 1% of the country's GDP is circulated in cash form, as compared with the EU at 11% and the US at 8%. Sweden's example is on par for the course of the world, as other countries are considering launching digital versions of their national currencies to stay competitive and relevant. What happened to Sweden's cash? Internet ordering has become the norm and cell phones have become ubiquitous. The market suggests that digital transactions are preferred to cash, and so the powers that be decided to do away from cash and scale back bank services, including ATMs. Riksbank, Sweden's central bank, also began serious steps towards creating the digital currency e-krona, which is seen as a precursor to the creation of the first central bank digital currency, CBDC. But the blowback has come just as swift as the new changes. As criticism started coming in, the Swedish government stepped in and passed a new law to mandate that banks offer at least minimal cash services. Digital spending on the uptick. 2 out of every 3 Swedes use the payment app Swish, introduced in 2012, which is fully secured by Sweden's top banks. In Stockholm, signs displayed at shops and cafes announce that they are cash-free. Furniture giant IKEA doesn't even bother with cash anymore and accepts payments exclusively via digital means, debit or credit cards. Niklas Arvidsson, a researcher at Stockholm's KTH Royal Institute of Technology, explains it's simply more efficient and cheaper to avoid cash. That includes the work that is connected to cash, to count the bills, to return the change, Arvidsson told Wired. There are also fees for cash-in-transit service companies, and insurance companies have higher fees if a store handles a lot of cash, since the risk of robberies increase. Cash's status tested by coronavirus. The COVID-19 pandemic, with various social distancing and contactless transactions, more encouraged by authorities, is furthering the debate about how cash is used. Many fear the passing of physical money from person to person, relating it to the virus itself. Despite existential discussions about going cashless in the West, people in a number of Middle Eastern and African countries remain inseparable from cash. Having access to cash, especially foreign currency such as US dollars, remains a necessity. China's digital yuan may be a game changer and set a new standard. Australia appears to be on track to be a digital-only country in 2022 or 2026. Which countries will be next?